Hey everybody, Preston Brent here with our Trader User Group Weekly Roundup for the week ending April 25th, 2014. What I've got on the screen here is the cash index S&P 500, the SPX. And I've got a weekly chart on here, and I just wanted to show you guys a couple of quick things. You can see here, in looking at this weekly chart, a couple of things that stand out in my mind anyway. Um, or the in this time frame right here, we've really been stagnant to hadn't really gone anywhere. Quite frankly, we haven't been able to take out the highs, and we're going back a little bit. Okay, we're going all the way back to the beginning of March. In fact, March, we started up in this area up here, and we ended up right down in the bottom of this sandbox right here, which is pretty much has acted as support going all the way back into Q4 of last year with highs of last year, and then as we go into January. So we've kind of been vacillating above and below this line, I think at an equidistance. But you can also see here that as we've made these new highs here, the MACD, and again, this is a weekly chart, has been slowly slipping. We're still above the zero line, but the line has crossed, and we're still moving to the downside. But looking at this weekly chart, you can see right here, this candle right here, we did finish the week down, just barely, but where we opened and where we closed, just a very small down area. But we did have a move up, and it was rejected soundly. We tried to come up and take out some high, this all-time high here, but we did not make it, and we just got rejected and got pushed back down again. So we need to be very careful. And I've been telling our members that, we have this geopolitical risk over in Eastern Europe, and no matter what the charts say and how much they may support a bullish bias, anything that can happen over there can push everything to the downside very, very quickly. Now, if we come over and look at the EMini Futures, and let's just take a step back and let's look at it on a daily chart. We'll use a daily chart. And I'm going to just kind of zoom out just a little bit. So you can see this channel that we've been in. This channel, and I've showed it a number of times in these weekly roundups. You can see back in this area here, which is Q4 of 2012 going into 2013. I mean, we've had a nice run up. I mean, it's just been very nice. And generally, when we get down towards the lower end of the channel, then, we bounce up. Just a few times we've gone below the channel, but we quickly get back up to the inside. Same thing on the top side. Sometimes we'll exceed it, but we'll generally kind of ride this channel up as it goes. And it's very nice how we've been adhered to this channel. Now, I said 2014 is going to be a different year for us. And as you can see here, when I blow this up, you can see going into 2014, and I'll just put it in a nice little sandbox here so that you guys can see. This is all of 2014 right there. Okay, so this is the price action so far this year, and you can see we entered the markets right here, and we're sitting right here. So slightly up, right? I mean, we're slightly elevated. But I mean, that is, folks, that's a lot of volatility in a very short period of time. To start at this point right here and to end at this point right here. So we knew that 2014 we were gonna introduce a lot more volatility. We're still playing within the confines of this upsloping channel, and you can see here the 50 EMA has pretty much been inside this channel all the way through Q4 of 2014, and it's just this red line here, the 50 EMA, has just been riding up, and at times it provides support, and other times when we break, we quickly come down, challenge the bottom half of this channel, and get back into it again, like in these areas here. So now we're sitting here, the 50 EMA is sitting almost at this key support point right there, which was the high that we finished in 2013, 1846.50. And we're sitting just north of that area right now, and just north of this upsloping trend line. So can we break it to the downside? Absolutely. The thing that's got me concerned is, we got a high here, we got a higher high here, intraday high of 1892, and we've got this bearish divergence setting up on the MACD. It really does concern me a little bit because, and we're also coming into the summer months, and it's an interim midterm election here in the United States. So typically the markets will sell off, and now we're going into the summer where volume is a little bit lighter, so the price action can be pushed around a little bit more. So I would not be surprised to see us come down and challenge this key pivot sitting right here, which is just a little bit south of the 1812.50. Should that not hold, the next challenge is 1773, all the way down to 1732. You can see the 200 EMA is sitting right here at 1762. Now, it's still got a little bit of an upward vector on it. The 50 EMA, as I look at it, also has a little bit of an upward vector on it, just because of this recent bounce that we've had here. You know, buyers have been stepping into the market. I mean, the good news is, you know, when we have these pivot actions like this, they're usually over very quick, and it gives us that V shape like this, right? So in this particular situation right here, we had the same thing. We had this sharp down move, and it just you know, like that, boom, and now a very sharp up move like that. And these patterns are, I will admit, they're rarer than you think. I mean, generally you have a bottom, and then you have a little bit of an attempt up, and then a little bit of a retest, and then it gets kind of choppy, and then it moves back up if that's the original bias and where you're going. We haven't had that. I mean, it's just like, you know, taking one of these old Super Bowls and bouncing it off a concrete floor, and it's just taken off. Same thing in both instances here. Buyers have stepped in. Both times buyers stepped in the minute it got south of that channel. Didn't let it stay there more than a few days, and then it just took off again. Okay. So now, in this particular case here, you'll see that when it took off, it kind of it held up at a prior high going into that down move, but then it broke it fairly. It took about a week, but then we cleared the hurdle. Here, this prior high is here, and what concerns me is we didn't make it up there. In fact, we've got this rolling over the MACD, which would suggest a further downward action with that bearish diversion. So the impulse move right here is weaker than this impulse move right here, from an energy perspective or from an action perspective. So, and we're coming into May. So, you know, heard the old theory, sell in May and go away. Well, you know, I look back the past couple of years, and April, May has been a time when the markets do pull back a little bit. So we've got a number of things working against us here. Now, that's not to say that we can't grind higher, but the markets do seem to want to give it up a little bit more and then kind of find a consolidation point. I will say that in the EMini S&P 500 futures, we're still in an up mode on what we use, but we're close to going into a mixed condition. The other thing I will point out, which I pointed out to our members last week to pay particular attention to, is the Russell and the Nasdaq. And if we look at the Russell, now keep this chart in mind right here. You can see right here that clearly we've been in this box, right? Clearly we've been in this box right here. And you know, yeah, we poked down below here, but we've been in a tight range here. And buyers seem to step in at the bottom down here. Sellers seem to step in up here like that. So you could say it's almost a sideways pattern or a consolidation pattern, trying to determine, you know, can we get escape velocity and go that way, or are we going to give it up and come back down this way? Nobody really knows, right? But we're in this kind of pattern. The thing that also suggests the odds favor a move back down in this area going like that is if we look at the small cap and higher beta, higher PE type stocks, and let's look at the Russell. If you look at this chart, well, it's very clear here. We're way outside the boundary of the channel. Now let's back out again and let's look at the Russell channel. Again, same time frame, okay? This is a daily chart. If we look at the Russell channel, you will see here that it started the same time frame in Q4 of 2012, and then all of 2013 we honored the channel. I mean, it was fairly nice, fairly predictable. And we kind of were at a tight, and you can see here with the Russell, it was actually a little bit of a tighter channel than what we had with the S&P. But the first early warning sign was right there. We had a big break, much bigger than the S&P 500. And you can see that this shaded area here, we found support, because it was a nice support area, right? We found it and we had that V bottom, just like we had in the S&P. I mean, a very nice movement here, and we actually took that high out, which was a great sign. But since then, we've been working it off, and I've drawn this regression channel in, and you can see clearly we are in a down mode here. Clearly, we are moving down like that. Now, the 200 EMA, which is that yellow line, provided support on the lower end of this regression channel, but it does not take a 5-year-old to determine that the distance is going that way. And this is higher beta, higher PE type stocks. Now, if we blow this up, and let's look at it a little bit closer, you can see here that this is a classic definition of a trend, right? You got lower highs as we come down, lower lows as we come down, and here you can see we hit the 200 EMA, okay? We hit it very nicely, and we bounced. It provided nice support there, and we've got a key pivot here with the Russell, 1078, the Russell Futures. And we had a hard reversal on Friday. We entered here, we came down, we entered there. So we're right in the center of the channel here. And the Russell, we are in a down bias on this chart. It's clear. So typically, as I've said and I've told our members, the rut tends to lead the markets up and it tends to lead the markets down, followed very closely by Nasdaq. Nasdaq has also been doing outstanding in 2013. But let's take a look at the Nasdaq. Let's look at the Nasdaq futures, right? There's another one. Very, very, almost looks like the rut, right? Same thing, same chart, same pattern, lower highs, lower lows as we ride this channel down like this. That is a classic definition of a trend. And now we're going to come down and test this key area, or it looks like that what the market wants to do. We are in Nasdaq, we are in a mixed market, okay? So the daily is mixed on the Nasdaq. On the rut, the daily is down. On the S&P 500, the daily is up. So we've got the S&P up, the Russell down, and the Nasdaq in a mixed condition. So if that isn't chop across all indices, I can't tell you what. It's unusual that you get all three of them giving us different indications like this, based on our system and how we work it. So this does tell me though that the forces that be are pretty much driving the market in that kind of direction right now to the downside. At least on the higher beta stocks. Now, what that also means is that if you see the higher beta, higher PC stocks or PE stocks going down, that's why we can't get escape velocity. No one wants to invest in the E-minis in the Dow. That means those sectors that are risk-off sectors, right, are doing better because it's where money flows when you want to save or conserve money or just put it in a risk-off environment. And which one is leading the way in 2014? Utilities. Here's the utility sector right here. And again, it doesn't take more than a 5-year-old to be able to come in here and say, okay, I'm going to box in 2014. That's 2014 right there. We entered it right there with utility sector, and we're right there. We took out a key level right here at 41.98. All right, that was a key price level that we just took out. We sat there for a week. We ran up, we came down, we tested it, and then we moved up and finished strong in the week. So the utility sector is leading the charge in 2014. Folks, you do not want to see the utility sector leading the charge anywhere. It does not bode well for the rest of the markets. It just basically says risk is off right now. Money is being protected in the utility sector, which tends to flow the same as the bond sector, because when interest rates go down, bonds go up. Interest rates go down is also positive for the utility sector because they're, in some respects, they're almost like a bond asset class, really. So this is kind of where we're sitting. In fact, on Friday, the utility sector was the only sector that finished in the green. Okay, so we got some activity going on here. The other thing that I will point out is, and I like to do ratio charts. If we look at ratio charts, and we say, okay, where is the um, consumer discretionary over consumer staples? Well, check this out, folks. This chart right here is a ratio chart of, you can almost say risk on, risk off, right? So starting in March, right here, this is where we are through March, okay? And it really started to take wind here at the beginning of March, where money started flowing into risk-off assets. Now, we really were almost flat for the first part of the year in Q1, because if I were to box in Q1, I mean this was Q1 right here, right? So let's come into the beginning of January, right there. That was Q1 right there. So let me do it this way so it makes it a little bit easier. This is Q1. Um, right in this area here, right there. Okay, so that's Q1, and we were almost flat in Q1, but so that's Q1 activity, and then this is Q2, um, where we started. Actually, Q2 it actually starts right over at the end of March. So, but anyway, we've got. This market really is in a hardcore down move. And again, this is basically staple or discretionary, and we got staples here, and in the numerator is discretionary, okay, or cyclicals. It's however you want to say it right here. So this is discretionary over staples. So discretionary is things like jet skis and big screen TVs and things like that. Staples is things that you need to have no matter what the economy. So when this market is falling, risk is coming out of the market, and you can see this big whoosh right there. That is not a good sign. The other one that I like to use, which is pretty good, is two sector ETFs that measure growth stocks versus value stocks. Okay, and in this ratio right here, again, the same timing right in this area here like this. You can see the same timing. Basically, it started big time in March. What this does is it measures growth. It's a ratio of growth stocks to value stocks. And growth stocks are those stocks that have higher PE, higher beta, pretty much reside in the Russell 2000, reside in technology or Nasdaq, and the value stocks are the big Dow stocks or stocks, some of the stocks in the S&P 500. So when this chart is going down, what's happening to risk? It's coming out of the market. Okay, so that means it's not surprising then that when we look at the performance last week and on Friday, but most of last week, those stocks that performed the worst were those growth stocks, and those stocks that performed the best were deemed value stocks or sectors like the utilities. So just like last week, what we need to do is watch very closely the Russell. I want to see where the Russell is going to go. I want to see if we come down and touch this 200 EMA. If we come down and we challenge this area right here, that's a key pivot for the Russell. Big pivot, 1078. All right, that's an intraday low back in February 4th or 5th, I think. And then I want to see if we can hold this 50 EMA. The 200 EMA has now got a very flat vector. The 200 EMA has got a downward vector. So that's all bearish. It bodes bearish for the rut. And then the same thing with Nasdaq. If I'm looking at the Nasdaq 100, which is the largest 100 largest companies in the Nasdaq, same thing. We've got the 200 EMA, we got 3401, so call it 3400, which is this shaded area right here. We want that to hold, and if it does not hold and we break through it, then we're probably going to check that 200 EMA very quickly, and then we're going to come down and we're going to find right around the 3300 is going to be the next logical, in my mind, place to gather support. So 3400, then down to 3300. So these are key areas. The other thing that I'm going to watch, if we look at volatility, okay, and I had our members, I took out a hedge in VXX. I had some VXX calls. You can see here with volatility, we really did not get too much of a rise last week with volatility. I mean, you could see this big move up on Friday, all right, but we're still elevated and we're still pretty much contained in this sandbox right here. If I were to kind of draw the sandbox, you can see we dip below. We have moments of quiet in the market, or moments of, not panic, but, the markets kind of bounce up. But we've been in this sandbox almost the whole year. The January started off very violent, and we had this big move up. But basically, we've settled into this area here, which is kind of anywhere from around 16 on the high side down to around 1350 on the low side. So vol has kind of been in this area most of 2014. 2013, if you guys recall, vol was south of 13 most of the time. In fact, we were down around 1250 most of the time, 1280 for volatility. So we've already seen vol making a play in 2014, and we are playing volatility a little bit more aggressive in 2014 than we've done in 2013. We've had a number of volatility plays. So this is kind of where I'm looking at this. The other thing I'm watching very closely are bonds. You can see with bonds, we had a strong finish to the week because Friday was just not a good day for the equity market. You can see the 200 EMA is flat. The 50 EMA has got an upward vector, and we are again at this very, very strong resistance point for bonds, okay? And you can see that we've cleared the 200 EMA again. Now the 200 EMA is sitting right here. It's a flat vector right here and right here. It was rejected. It was rejected right there. We sat here for about a week. We couldn't get up above it. I do believe we're going to get some more downward action in this. But keep in mind the geopolitical thing going on over in Eastern Europe. Should Eastern Europe turn into a nightmare scenario where Russia goes into Eastern Europe, you're going to have bonds moving up in this area here, and then I'm going to be a big shorter of bonds. I'm more short bonds longer term, kind of a perma bear, at least for now, in bonds. But near term, bonds are showing strength, which means, again, like utilities, money is seeking safety until the markets kind of shake themselves out. All right, everybody, as we come into this week, we have a couple of really big reports, GDP numbers, and a few other things coming out that will be market-moving events. So for our members, I will see you tonight in our Secret Trader session for the week. Coming up, some of the things that we'll be looking at, and then for our non-members, I invite you to come in, take a look at our special offers page. I think you'll find it very interesting. Love to see you come on board. Otherwise, have a really great remainder of the day today, and members, I'll see you tonight. Have a good one. Bye now.